It is 2026. We're no longer in 2025. The world is not falling to the ground. Stop, Chicken Little, stop. Hey neighbors, if you don't know who I am, my name is Joshua Sherman. I'm a realtor and a broker with Casey Realty Group at RE/MAX Trinity, and I've been doing this for about, almost a decade now, and I can say for certain that we are finally stabilizing, which is great. Let's dive into why I think that and why I think 2026 is going to be a great year, especially this first quarter. Now first, let's start with a quick snapshot of the latest housing stats that Fort Worth has to offer. Now, in December, the median price for a single-family home in Fort Worth was about $315,000, which ironically was the exact same as in November of 2025. I don't know how that happened. However, it is down about 2.9% from December of 2024, when that was around $324,500. In other words, home prices have edged down ever so slightly year over year. Now, this mild price decrease suggests a bit of a market correction from the rapid gains of previous years, and that does not indicate a crash despite what the media tells you. And I'll talk to you about that a little bit later. Essentially, medium home prices have stabilized to the low to mid 300,000s, at least for now. Now, Fort Worth saw about 589 closed sales in December of 2025, and that's actually up from the 502 sales that we saw in November. And this is typical year-end push as buyers and sellers are trying to close before the holiday, so I'm not too concerned about that. Now, that's almost the same that we saw in December of 2024, which was around 598 sales. Now, year over year, that is only about a 1.5% lower in closed sales, so demand technically hasn't disappeared. It's really kind of holding steady. Now, considering the higher interest rates throughout the entirety of 2025, the fact that the sales volume stayed on par with last year's is a sign of resilience in our market. Now, on average, homes sold for about 96.3% of their list price in December. Now, that is slightly higher than November's 95.6% and even a bit above the 95.9% that we saw in December of last year. Now, a rising sold to list price percentage means that sellers are getting closer to their asking price, and that's a hint that the competitively priced homes are still attracting those buyers. And I will say buyers do have some negotiating power and some negotiating room now, but sellers aren't just handing away their homes. We're actually seeing a pretty decent balance between buyers and sellers and who has the upper hand. Now, the average time on market for homes was about 38 days in December, which actually decreased from the 43 days that we saw in November, and it's just about the same as the 39 days that we saw in December of 2024. So, homes are still selling in roughly about 5 to 6 weeks on average. And that is a far cry from the lightning fast 20 days or under that we saw during COVID. Now, we ended 2025 with about 3.3 months of inventory in Fort Worth for single-family homes, and that is down from the 4 months that we saw in November and just a hair below the 3.4 months that we had a year ago. Now, for context, 6 months of inventory is typically considered a balanced market, meaning that the buyers and sellers have about equal footing. So just over 3 months, technically speaking, Fort Worth is still in a seller's market, albeit it is a very cooler one, and it is definitely not the ultra tight conditions that we were dealing with a couple of years back. And that partly is due to decreasing inventory. Now, there were 2,176 homes for sale in December and roughly a 4.4% fewer homes than the 2,701 that we saw prior December. And new listings are coming on the market were also down. 588 new listings in December, which was a 4.5% drop year over year. Now, this limited supply is one reason why we aren't seeing those prices just plummet and crash. Even though buyer demand has cooled down compared to 2020, no doubt about it, there still aren't enough homes for everybody who wants them, which helps put a floor on those prices so they're not just falling and crashing and free falling. Overall, the December numbers paint a picture of a very stable but cooler market that we're used to seeing. Prices are slightly down from last year's levels, inventories are still relatively low, and homes are still selling at a reasonable pace, albeit a lot longer. It is a more balanced market, which is healthy, and that's just something we've not seen in a while, so it makes people very uncomfortable. Now, I know you've been hearing horror stories online from the media, and so why am I saying something different? That's because Fort Worth is the greatest. Let me explain. So one of the things that I love about Fort Worth is our strong economy, and it is booming in multiple ways. That provides a solid foundation for our housing market. Now let's touch on a few key factors of why that is. Now one of those factors is Fort Worth's population growth. We have been growing significantly. The city hit the million mark in population as of 2024, and it's officially become the 11th largest city in the US, and we're just right behind the number 10 in the US. Now, Fort Worth grew 3.1% just from 2023 to 2024. And nearly 10% since 2020. And that is one of the fastest growth rates among all of the big cities in the US. Now that is a massive influx of new residents. That's thousands of families and professionals moving here for jobs and affordability and are really laid back and pretty great quality of life. Practically, more people moving to Fort Worth means that more demand for housing, whether they are renting or whether they are buying. And that's one big reason why our housing market has stayed resilient even through this tumultuous time. Now, when you have about 150 people moving to the Dallas-Fort Worth area every single day, it creates constant demand for homes. To go hand in hand with our really great population growth, that's our strong job market. Now, the DFW Metroplex continues to be one of the top metros in the nation for employment growth. Companies are still relocating and expanding here at a remarkable pace. That's drawn by Texas's business-friendly climate and really our skilled workforce. For example, Bell Textron, a major aerospace manufacturer headquartered here, announced a $632 million factory expansion in Fort Worth to build a new, I think it's a V-280 Valor helicopters, had to look that up, which comes with about 520 new high-paying jobs right here in our city. Another example is Dick's Sporting Goods has they're planning to build a massive 880,000 square foot regional distribution center that's supposed to bring around 300 jobs. We also can't forget that we have JP Chase doubling its Fort Worth headcount by moving into a new office tower downtown, and Texas A&M University investing a research campus in Fort Worth, which is already attracting tech companies to our city. Now, these are just a few examples, but the message is pretty clear. Fort Worth's economy is strong and diverse, from aerospace to logistics to finance and education. The job growth here has outpaced the national average. So for example, the Dallas area job growth was recently reported to be 6.5% annually, which is far above the 1.7% that's the US average. More jobs and corporate investments means that more people have the income and confidence to buy homes. And more people will be moving here for those new job opportunities. This is what is supporting our housing demand and home values. It's one of the big reasons why experts say that North Texas won't see a housing crash. Our local fundamentals, jobs, population, businesses, they're just simply too strong. In fact, the Fort Worth Economic Development Partnership reported in late 2025 that in its just first 2 years of operation, it helped to bring 11,000 new jobs and almost $10 billion in capital investments into the city. And that is huge. We're talking new employers across various industries setting up shop and expanding in Fort Worth's backyard. Now, you might wonder, with all of these people coming into the area, are we overbuilding homes? And the answer to that so far is no. In fact, North Texas has a well-known housing supply shortage. We need a lot of new homes each year to keep up with the amount of people that are moving here. And the DFW area would need about 60 to 70,000 new home units per year just to match the population growth. But builders have been consistently falling short of that. Even with the new communities that are popping up in Fort Worth and on the outskirts of Fort Worth, particularly on the north side, we're simply not oversupplied. We're still slightly less undersupplied than before. And this structural shortage of housing is one of the other reasons why our prices have been stable, where everywhere else in America, they're much more volatile. When there aren't enough homes to go around for everybody, it really puts a floor under those home prices so they can't fall fall. Instead of dropping and crashing to the ground, we have a market where things just kind of cool off and correct mildly over time. We just don't crash. Now, we can't discuss the housing market these days without addressing the elephant in the room, the mortgage rate situation. Now, 2025 was a challenging year for many buyers in terms of affordability, largely because mortgage rates climbed to heights that we hadn't seen in a very long time. The good news is that as we enter 2026, rates aren't really getting worse and have actually improved quite a bit from their peak. As of the first week of January in 2026, the average 30-year fixed-rate mortgage is hovering around the low 6%, depending on a lot of different factors. Now, to put this in perspective, rates hit their highest levels in late 2023 and then again in early 2025. We saw peaks over 7%. Though much of 2025, the 30-year rates averaged around 6.7%. So today's 6.2, 6.1 is actually the lowest we've seen in over a year. So what does this mean if you are a prospective buyer? Well, two things. One, you likely have more buying power now than you did a year ago when the rates were about 7%. Make sure to check with your lender, and if you need a good one, just drop a comment below and I'll be sure to connect you with a good one if you don't already have one. And two, if rates do drop further later this year in 2026, there could be a surge of buyers returning to the market. And more buyers entering the market could mean that there's a lot more competition. And with more competition, usually home prices tend to rise again. And I'm already hearing that sentiment. I have for a long time. Should I just wait for rates to drop before buying? It is a very common question and a very common tactic. The catch is, when rates do drop meaningfully, demand tends to spike. And then you're going to be facing more bidding wars or rising prices, and you'll just be outclassed in your price range. I say, if you're able to afford a monthly payment comfortably, now is the time to buy. You really want to look at the monthly payment. That's what's important. So what do these trends mean for you as a buyer or a seller in Fort Worth as we enter into the first quarter of 2026? For buyers, this market offers opportunities with a dash of urgency. You're not facing the frenzied bidding wars of the COVID times that we saw a couple of years ago. Thankfully, you can take a bit more time. Remember, the average day on market is roughly around 38 days, so houses aren't selling overnight. You have time to shop around. You also have more room to negotiate. The average sale to list price is about 96%, so many sellers are willing to entertain lower price points or a lot of big concessions like closing costs or rate buy down to help you with monthly mortgage payment. Now, inventory is improving slightly in some price ranges, and builders in the area have inventory that are motivated to sell, often with crazy incentives like paying down your points or throwing in great upgrades. All of this means that if you're a buyer, you have leverage and choices now that you really haven't had in a very long time. However, and here's that urgency part that I was mentioning, this window is not going to last indefinitely. If mortgage rates do dip into the fives, we could see a ton more buyers come from the sidelines and enter the market. You know, those people who pressed pause in 2022 to 2025 saying, I'm waiting for the rates to go down. When that competition does come back onto the playing field, those prices are going to raise. So you might be better buying something sooner while others are still cautious and waiting on the sidelines, rather than later when everyone is rushing back in, driving home prices back up. Now for sellers, you may have heard media talk about the housing crash and you might be a little scared, but in Fort Worth, we still have a soft seller's market in many ways. Prices are slightly lower than last year, but not by much. And more importantly, inventory is still relatively low. You have less competition from other sellers than you did in 2024. Your biggest competition are new builds and those builders who can offer very low interest rates and huge incentives. Keep in mind, today's buyers are savvy and rate sensitive, so they're not going to overpay. You really need to work with a knowledgeable agent, that's going to price it right the first time. Make sure you're shining up the property, like touching up and staging. That goes a long way. And of course, someone that has a marketing strategy that is going to work well for you. And of course, be prepared to stay on the market for a little bit longer. Don't be discouraged if it doesn't sell in the first weekend or if you don't have showings for a couple of weeks. That's normal. So what can we all expect as we move through the first quarter of 2026 in the Fort Worth real estate market? Typically, January is one of the slower months for housing. People are recovering from the holidays, weather is unpredictable and oftentimes a lot cooler. But come February and March, we usually start to see that activity pick up again. I expect the same thing to happen this year as well. Already, some agents are reporting that there's a bump in buyer inquiries online, and now that the rates have kind of lowered down to 6.1%, hovering around that area, I think we're going to see a lot more buyers and a lot more activity. By March, I anticipate we'll also see a lot more listings. There are a lot of sellers that wait for the spring selling season. It's a whole thing. So I think that Q1 is going to start off pretty slow, but I think it's going to have a strong finish. And don't be surprised that if March 2026 is much busier than in December or January of this year. The Fort Worth housing market entering into 2026 is stable, it is resilient, and it is brimming with potential. If you're a buyer, you have a promising window to make your move before the crowd potentially returns. If you're a seller, you can still achieve great results thanks to our low inventory and steady demand. So don't let the doom and gloom of the headlines from national news fool you. Our local market is in a much better position and much better place than it was even a year ago. And all signs point to a more healthy, more active market as 2026 unfolds. I hope you found this update helpful and informative. Be sure to share this video with someone who thinks that the world is falling and that the DFW market is going to crash and might need to hear some reassuring news. And if you're looking to make a move in 2026, be sure to send me a text to set up a time where we can talk more specifically about your unique situation. I've helped so many people over the years make their move here in Dallas-Fort Worth, and I'd love to help you as well. So until next time, bye neighbors.